Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Natasha Aina binti Muhammad Fauzi 2554453. Next.
My name is Nik Fatih Fahana binti Nik Zulkifli 2555380.
Assalamualaikum warahmatullahi wabarakatuh. My name is Soleha binti Sabi, 256444.
Assalamualaikum warahmatullahi wabarakatuh. My name is Isra binti Nurizan, 256453.
Assalamualaikum, my name is Nuratika binti Ibrahim, 267993.
Okay, so today we are present about the tax, about the development of tax administration system in Malaysia. So I will share the slide. Nampak ke?
Boleh?
Okay. So here is our contents. Next is for the introduction. The tax collection is revenue for the Malaysia to support the development of the country. For the working people with salary payment must have the awareness regarding the tax payment, which is they have to be a responsible people to pay the tax when their salary is achieve the amount to pay the tax for the country. Next is people may access by their own in the portal of LHDN to pay the tax. Next is taxable period for Malaysian tax year is based on the calendar year from 1st January until 31st December every year. Malaysia can adopt the self-assessment system, which is they can assess by their own. The taxpayer is responsible for computing one's own chargeable income and tax payable, as well as making payment of any balance of tax due. Next, for the definition. Okay. For the definition, the task of a tax administration is to collect all the tax revenue, as I mentioned in the introduction before. It is due in a fair and efficient way. This is to ensure taxpayers comply with the rules and adequate resources. Next is the types of tax. There are two types of tax in Malaysia, which are the first one is direct tax conducted by LHDN, and it is levied on a person or company's income and wealth. It is paid directly to the government. The source to be taxed like income tax and real property gains tax. Secondly, indirect tax. It is conducted by Royal Malaysian Custom Department (RMCD). It is charged on a person that consume the goods and services. These types of tax is paid indirectly to the government. So the sources that will be taxed is like goods and services tax, which is GST, service tax and sales tax. Next, I pass to next presenter.
Okay, next is about Malaysia taxpayers' responsibilities. Okay, every taxpayer who is liable to tax is required to declare his income to income tax office. And the taxpayer is responsible for, okay, the first one is obtaining and forwarding income tax return form. Okay, second is declaring income and claiming expenses. Okay, the third is
Wait. Okay, sorry.
okay, the third is computing income tax payable. The fourth is keeping records for audit purposes, and the fifth is paying the income tax payable. Okay, next. Okay, The last part is other than truthfully declaring your income and reliefs and submitting your tax files before the deadline stipulated by LHDN, the taxpayer is also responsible for record keeping. Taxpayers are required to keep the following documents for 7 years from the end of the year in which the income tax return form is filled. Okay, these are the form that need to declare by the taxpayer. Okay, like EA or EC form, original dividend vouchers, insurance, premium receipts, book purchase receipts, medical receipts, donation receipts, zakat receipts, children's birthday certificates, marriage certificate, other supporting documents, working sheets if any, and this is extremely important as LHDN has the right to request for any supporting documents for tax paid previously. Okay, this is the important part because there's LHDs want to make sure about their about what they have paid before. Okay, next. Okay, next part is the characteristic of taxation. Okay, it is enforced contribution. It is payment. Its payment is not voluntary nature, and the imposition is not dependent upon the will of the person taxed. It is generally payable in cash. This means that payment by checks, promissory notes, or in kinds of it is not accepted. There are taxes that are imposed or levied on acts, right or privilege. For example, documentary tax. And it is levied by the state which has jurisdiction over the person or the property. Okay, next is about tax rate in Malaysia. Okay, the first one is income tax rates for the year 2020. This is the update one. Okay, from what we have learned before in class, there was type of from what income to pay tax. Okay, the first is 0 ringgit to 5,000. Not have to pay zakat. Not have to pay tax. And also for the 5,000 lah. Okay, next is 15,000. Need to pay 150 for tax, which is first 1%. Um, and 20,000 to 35,000. On the first 20,000 will be paid for 3%, and until 35% also need to have need to pay 3%, which is 450 ringgit. And so on lah. And if the exceeding is at the last one, if the taxpayer exceeding 2 million. Okay, so on the first 2 million until the next ringgit, the rate tax is 30%, which is 517,650 ringgit. And so exceeding, if the income is exceeding 2 million, the taxpayer need to pay 517,650 ringgit. Okay, next. Okay, this is for tax rate of company. Okay, the latest one is in 2019. Okay, the company with paid up capital not more than 2.5 million on the first 500,000, they need to pay 17%. And yeah, if the company with pay up capital for more than 2.5 million, the company need to pay 24% of their income. Okay, next. Okay, corporate tax rate. Okay, Okay, this is the types of the corporate tax rate. Okay, the first is modal berbayar the and up until 2.5 million for the early basis. Okay, the first one is the income for 500,000 for 500,000. Okay, for the update is the corporate need to pay 17%. 70%. Okay, and the next which is the model is more than 2.5 million, so that the company to pay 24% of their income, like in company tax before. Same. Okay, next. Okay, the cooperative tax is like koperasi company. Okay, okay, for the income. Okay, for 1,000 until for 1 ringgit until 30,000. Okay, there's the cooperative no need to pay tax. Okay, the if the income 30,000 until up to 750,000, they need to pay tax for the percent required. Okay, so for 30 to 60,000, the cooperative needs to pay 5%. For 16,000 and 1 ringgit until 100,000 need to pay 10%, and lastly for the 750 thousand and above need to pay 24% tax for the income. Okay, next. Okay, that's from me. I will pass to my team.
Okay, Assalamualaikum warahmatullahi wabarakatuh. Okay, I will proceed with the personal tax. Okay, personal tax is charged on individuals' income, which in Malaysia, the progressive income tax rate structure is being utilized in order to impose the rate toward taxpayers, in which the payers' tax rates will be increased according to the income base. Um, the progressive income tax rates is to enhance income equality, as the tax is imposed for individual ability in paying tax. Or could be more clearly, the rich person should be contribute higher payment rather than the medium or the poor. The tax rate is imposed to a taxpayer is starting from 0% to 30%, like Umu said on the previous slide. Okay, next. Corporate tax. Corporate tax. Okay, corporate tax is imposed toward profits that gain from a corporation, whereby it is computed after deduction of cost of goods sold, or the company's operating expenses. And the issue that always arises in corporate tax is a double taxation, in which the income tax that had to be paid twice consists of corporate and personal level, although it gains from a similar sources. This issue happen when the corporation are deemed as a separate legal entity from shareholders, in which the dividend amount that distribute to shareholders is imposed with income tax liabilities, which while it's already taxed at corporate level. Okay, next slide. Okay, rate for residence company is 24%, while for companies that have gross income not exceed 50 million, the rate is imposed is 17%, like Umo explained just now. And company known as a resident in Malaysia, when there is at least one meeting of a BOD that held in Malaysia, and it's regarding and the discussion regarding the management and operation of the company. While the company is known as non-resident is due to a permanent establishment in which they are represent on behalf of the company, such as activities like construction and installation project in Malaysia. Okay, next slide. Okay, the next one is tax avoidance. Okay, what is tax avoidance? Corporate tax avoidance is defining as a reduction of explicit corporate liabilities in company, and it not clarify as is not clarified as illegal, as it affect the government revenue for development of public infrastructure, service and utilities. The features of utilizing tax avoidance is through cost of debt and debt substitutions, or the amount of tax from the tax avoidance could be used to finance other projects. And the benefits of tax avoidance are for individual or company from the cash itself, which it should be used for other opportunities such as investments in order to raise their assets and firm's value, while the stockholder could enhance their dividend as well as a shares value. Okay, the next one is next slide. Okay, the next one is a tax evasion, which is defined as illegal behavior that intentional deed or activities related to violation of tax law in order to evade the tax payment. The opportunity will be grabbed by the businesses or individual in evading the tax during the system operation is inefficient, ineffective, and it lead to huge of losses to the governments. Okay, factors that influencing people to evade the tax due to inflation rate. It will rising up the inflation rate in economy. The higher the higher prefer of the taxpayer to save their money rather than paying tax when the inflation rate is happen in Malaysia. Okay, for corporate tax evasion, is through manipulating and frauds through their financial report by increasing the expenses and reducing the amount of sales in order to evade the tax payment. Next slide. Um, oh, it is all for me. Thank you.
I will continue on the tax system in Malaysia. The major tax law income in using by the Parliament, which is Income Tax Act 1967, and the Investment Promotion Act 1986, the Real Estate Gain Tax Act 1976, and the Petroleum Income Tax Act 1967. For the offshore company that perform offshore business are subject to the tax regime of the preference under the Labuan Beach Tax Act 1990 on the foreign business activity. Like my friend has mentioned before, there are two types of tax, which is direct and indirect. For the Malaysia, we are using the direct tax, indirect tax, sales tax, and the goods service tax. For direct tax, a tax that we pay direct to the by the citizen to the government. For the tax in line indirect to the government are indirect tax. The service tax are example indirect taxation. The tax administration of the facility are subject to the Royal Malaysian Custom Department. Next, for the income tax for foreigner, the foreigner who qualify as a tax resident follow the some tax guideline that for like a Malaysian, which is the progressive tax rates and the exemption as a Malaysian, and they are required to fulfill the file income tax under Form B, but not non-resident are subject to the fixed tax rate based on the income type. But not all foreigner are subject to the tax, which is there is a list for the who exempt for the income tax, which is foreigner national working on the Malaysia ship, which is above age or 55 and receive the pension from a job in the Malaysia. Besides that, the foreign that receive interest from the bank and receive tax exemption for dividend. That's all from me. Next, I will be pass to my friend.
Okay, now we move to the issue of tax in Malaysia for SST and GST. Okay, like we know, tax is the main source of revenue for government finance to finance our public expenditure. There are two types of taxation. First is direct tax and second is indirect tax. Good and service tax (GST) and sales and service tax (SST) is under indirect tax. At Malaysia implement SST around 1972, which is sales tax 1972 and service tax in 1975. And on 2014, government replaced SST with GST, and again they are changed on tax system at Malaysia. On 2018, SST replaced GST again. And next, the next is issue for sales and service tax, which is SST. SST implementation will reduce customer and business burden on tax payment. But however, at the same time, government will be affected by falling of tax revenue. This because SST, the charge of SST is lower than GST, and not all parties in the market will charge on SST. SST collection cannot fulfill the government expenditure needs, such as for the public service or um, for health or schooling. And SST less efficient and effective of tax system. Uh, SST is not transparent like GST, and SST only burden some parties in the market only. Okay, next. Okay, next is for goods and service tax issue, GST. The implementation of GST prove as a efficient tax system, and GST can safeguard Malaysian government finance during hectic time. However, there are several issues that occurred when implementing GST. First, for the public and citizen, GST will lead of cost of good and service price increase, and this will increasing the living cost for the citizen, and automatically this will burden public and business entity. Okay, for the second, for the business side, many business entities find that administration costs, operation, and to implement this system will lead the increase of cost. Business for during the GST, the business need to setting a new accounting system, book entry system, 20% cost, because during the GST, all company need to save all the document for claim at the end of the year. Okay, in other words, business may bear extra cost in order to implement GST. Okay, apart from that, that system in Malaysia fails because of, based on my opinion, tax system in Malaysia fail because of the political issue. GST and SST uh, be used as a political tools, not to improve a country, not to improve country. They using tax system to be arguing and fighting each other, and um, not implementing this tax system to the good of our country.
So the last part is conclusion. Uh, it is concluded that pay the tax to the Malaysia purposely to show the attitude how to appreciate what we have nowadays for Malaysia itself. It is uh, it is credit to people who are working and stay in Malaysia, and they have to give the appreciate thing like tax to show how they grateful to be in Malaysia in order to help the development of Malaysia itself. Next is the more people pay the tax to the Malaysia, the more the development will be improved. The tax revenue is important in development of Malaysia in order to stabilize the economy. The awareness of the pay the tax revenue to the country from people who live and work there is very significant. So that's all from us. Thank you.